Well, another volatile day on Wall Street after yesterday's historic rally. How is the plumbing of the market holding up during all of this volatility? Well, joining us now is Stephanie Ferris. She is the CEO of FIS. It's a fintech company that powers the infrastructure behind banks and financial services companies. She's also featured in CNBC's Changemakers list this year. And Stephanie joins me here on set for her first broadcast interview.
My very first broadcast.
Welcome. I want to start right there because we've been talking so much about the volatility and the volumes that we've been seeing traded in recent days. But we haven't talked about how well the infrastructure is operating. And you sit at that intersection between financial activity and technology. What are you seeing?
I do. And thank you for having me. Very excited to be here. It has been a rough couple of days and couple of weeks, but what I would say is for those of us who are in the financial services industry, and let me take a step back and describe what FIS does so that people can have an appreciation. We really are a global leader in financial technology. So the financial technology that moves money globally around the world, whether it's money at rest in your bank accounts or you're paying money in movement or money at work and investing. So we provide the technology that does that. But what I would say is we should all be really proud of the industry because regardless of what's happening, and there's a lot of volatility, we may not like the outcomes, the financial services industry is operating as it's expected, as the technology says that it should be working, and we haven't had any major blips. So I would say from my chair and from your chair, we should all be really proud of that.
So in light of that, what does that mean in terms of the fact that the infrastructure is functioning the way it was intended to? How does that help to keep this situation that we're seeing right now from become what I would call essentially a bank run and feed upon itself?
Yeah, so no matter what kind of crisis we're in, whether it was the great financial crisis or when we had some issues with bank liquidity, or even now, the thing that people get most concerned about is can they get to their money? Whatever they want to do with their money, if they want to pull their money out, if they want to trade money, if they want to loan money. And so when you think about that, it's about the safety and security and the trust that you have in the system. So when we talk to clients about our technology that runs these, it's about resiliency, safety, security. Can you see your money? Can you get to your money? And so that is the trust we all have in the system. That is what the technology and infrastructure provides. And when people feel like that's safe, then the system works as it's intended.
That's interesting. You just put out research today that you did with Oxford around this, too. Yeah. So where do you see friction points within the financial services system?
Yeah, so we sit in this very interesting, unique vantage point across the money life cycle. And generally, we see a lot of things growing, but we also see lots of places of friction. Where you want to get your money faster, real-time payments, et cetera. We also saw a lot of operational inefficiencies around fraud and cyber. And so we're very excited about this piece of research we just put out, which talks about those operational efficiencies and for the first time quantifies on an annual basis how much they cost companies because of all those inefficiencies. It's $100 million a year for every company as they look and deal with all of those inefficiencies and frictions.
Now, your company oversees trillions of dollars in transactions across banking, capital markets, corporate as well. What are you seeing right now in terms of deal activity? We've been talking a lot about uncertainty. Yeah. And how does it affect FIS?
Yes. So you're exactly right. 10% of the world's economy goes through our technology and across our systems annually. So we have an amazing vantage point. And honestly, it's an honor and a privilege to serve the financial services industry in that way. We see lots of different things. It depends where you are in the market. And you can see that if you're in the trading side of the market, we're seeing volumes at an all-time high. And we're here to make sure and focus for our clients that they can trade and settle all of those activities. In the M&A and IPO market, there isn't much activity. So it really depends where you are on the spectrum. But our goal as we talk to clients is making sure that no matter where they are, they can take care of their customers.
We've got about 45 seconds, so we've got to keep this one kind of quick.
Okay.
But when you see this uncertainty more broadly in the market, there's concerns about, business activity, consumer activity. What does it mean for your company specifically? Because as one analyst put it, sees you as maybe a little more recession-proof because of where you sit.
Yeah, we don't have a direct tie. Tariffs don't impact us directly. We're obviously keeping an eye on them. And we're not based on consumer spend. We're primarily B2B. So okay. We are a little bit protected from the volatility. But we continue to focus on our clients. And we're very happy with what we've been doing thus far and appreciate you having me.